Hi, welcome to Westpac's not quite end of London trading day market wrap for Tuesday, September the 20th. I've got a commitment outside the office at 5, which means I'm doing this a little bit earlier than normal. Nevertheless, as things stand, we've seen a reasonable return of positive sentiment into equity markets. Risk appetites come back a little bit. It seems to have been triggered by two main events. The Greek finance minister said that discussions with the EU bailout team had been productive, and markets chose to view that as a positive development in terms of the will they or won't they default debate. Also, there's the FOMC meeting in the US ongoing now. It's a 2-day meeting. We don't get the statement until tomorrow, but markets seem to be perhaps pricing in just a little bit of hope that we'll get a little bit more than the so-called Operation Twist, which is that's the speculation that the Fed will keep buying long-term or start buying more long-term bonds, but they'll sterilise it effectively by selling shorter-end securities. So not really genuine quantitative easing like we saw with QE1 and QE2. If the Fed hints at something more than that, then that could be a positive for markets. And I think there's been an element of speculation about that driving positive sentiment today as well. And there are a few other stories around. In Germany, for example, utility companies benefited in terms of their share price gains from a court case ruling related to taxation issues and in the nuclear power industry. So a few stories there too. On the data flow, housing starts in America, they fell 5%, quite soft in August. That's the second consecutive monthly decline, although permits managed to pick up. So overall, the message seems to be ongoing stagnation in housing rather than a renewed trend lower. The level of permits is now running higher than starts, suggesting that if those permits are actually used and converted into starts, that there could be a little bit of a pickup in starts down the track. But all that will do will simply leave a pretty flat picture in place, as I say, rather than one that could actually be deteriorating. We saw in Germany the latest ZEW analyst survey for September. No, not surprisingly, given that German stock markets fell sharply between August and September, we saw a further fall come through there. Oh, and the IMF has revised its growth forecasts for the global economy and the major economies. They're looking for 4% growth this year and next year. That's cut from 4.3 and 4.5% respectively. Still way ahead of Westpac. We're on 3.9% for 2011 and 3.3% for 2012 in terms of our global growth view. But then look, we've always been at the vanguard of warning about the tough times ahead for the major Western economies. And indeed, on that point, I'll just run through some numbers for you. The IMF has for next year US growth forecast of 1.8%, Europe's 1.1%, and the UK's 1.6%. That compares to us at Westpac, 1.2% for the US, minus 0.4% for Europe, and just 0.5% for the UK. Of course, our view incorporates debt restructure, default from Greece, probably Ireland and Portugal as well, at some point fairly soon, whereas the IMF cites that as a risk. The IMF also does have an alternative scenario, and that's one where both Europe and the US actually re-enter recession heading into next year, into 2012. So even weaker than Westpac's base case scenario. Okay, that's enough chit-chat. I'll give you some numbers. In equity markets at 4 o'clock London time, we've got the Dow in the US up 0.8%. The broader S&P measures up 0.95%. The French FTSE in London is up 1.75%, and the French market 1.4%, and the German market, remember with the utilities there benefiting from that court case ruling, German market up 2.7% today. Commodity markets, just quickly, gold's up 1.6%, $1,808 an ounce. Copper's unchanged, and we've got crude oil up 1% at $86.63 a barrel. The Aussie dollar dipped to 1.015 against the US dollar after the release of the Reserve Bank minutes, which suggest that a rate cut is potentially could be just around the corner. And of course, our view at Westpac is we will get a rate cut from the RBA in December. That pulled the Aussie dollar down those minutes. Since then, the return of risk appetite, the strong performance on equity markets has lifted the Aussie. It's back up around 1.03 as I'm speaking to you at the moment. Plenty more from the Reserve Bank of Australia this week. We've got Rick Bartolino, the deputy, he's in New York giving a talk Wednesday, and other senior RBA officials are speaking as well, and we get, I think it's the Financial Stability Review on Friday from the RBA as well. So plenty of central bank developments to watch for in Australia, on top of the Fed tomorrow, of course, in the US, and Westpac's putting out the leading index today in our ACI survey that we do with the Australian Chamber of Commerce and Industry a little bit later this week. Okay, so plenty to look forward to. I'll speak to you tomorrow.